if you are a bad bettor, they will take you to Knicks games and like buy you drinks and rub your back and do all this stuff. Like that is fundamentally exploitative.
Prediction markets do meet the definition of what could be considered a gambling product.
Only a judge can say that for sure. Is the issue actually fairness, or is the issue that people are exploiting a vulnerability of these markets against them?
Welcome to the podcast, Aaron.
Thank you for having me.
Do you want to tell us a little bit about yourself and your background?
Yeah, I'm Aaron Brogan, founder of Brogan Law, which is a boutique law firm here in New York that represents cryptocurrency, prediction markets, alternative financial assets firms, emerging companies in a variety of matters, including regulatory strategy, direct policy, work with the federal government, and a lot of transactions. That's us.
Okay, amazing. Well, it's great to have you on. We wanted to bring you on to talk a little bit about prediction markets. So I know you've been talking about prediction markets since 2024. So it's been a
Yep.
couple of years now of discussing the growth of it, the legal challenges of prediction markets. Can you tell us a little bit about what the journey has been for prediction markets as a type of market from 2024 up until now?
Yeah, I think it's interesting. I feel like a crypto prediction market OG, even though it's only been a couple years. Um, but when I think about this market, you go back to even earlier, like work by Robin Hanson, all this theoretical work on the idea of prediction markets, which I think is what got like Tarek and Shane into this initially, like years and years ago. And I remember, I think it was Nate Silver's first book, The Signal and the Noise, where I was first introduced to this idea of prediction markets. I just found it really interesting. Like I just thought it was a really cool idea,
Mhm.
way to develop novel signal. And then that just like went into the recesses of my brain, and I didn't think about it for like 10 years. And then in 2024, I had started to cover that industry where people came in and were like, "Hey, we want to set a prediction market." Really, what people wanted to do was set up unregulated prediction markets, which is really hard to do, to somewhere between really hard and completely illegal to do. Uh, so anyway, I was covering that market in 2024, right around the same time that Kalshi was fighting this legal battle
Mhm.
in DC. And to understand that, you kind of have to go a little bit further back even. So Kalshi I think they raised in 2018. Is in the kind of, the first Trump administration was when they first raised, and their strategy was, "We're gonna go get a DCM," which is a designated contract market, which is a CFTC registration that allows you to offer derivatives. And they're like, "We're gonna go get this and then use it to offer event contracts, which are derivatives without any that are based on events," right? A and nobody knew if you could do that. So around that time, there were, some prediction markets. There's like Predict It was already around, and there were universities that were running prediction markets under this kind of educational exemption with the idea that we're generating signal, but nobody was really doing it as a commercial enterprise. And so Kalshi somehow, I still don't know how they did this. I don't know who took them in. Maybe it was S&C, but somebody took them in to the CFTC and convinced the CFTC at the very end of the Trump administration to allow them to become a DCM and then offer event contracts and prediction markets. But I think what they found in the beginning, in those like 4 years between kind of when I came in 2024 and when they first got this license registration, is that they were only able to offer it on markets that people didn't find particularly salient. Markets that cover elections, that cover sports, that cover entertainment. Those are the things that it seems like people are really interested in.
Mm.
And at the outset, in that historical CFTC, I think people thought those markets were not legal. But to Kalshi's credit, they felt like this is wrong and, and we can go sue our regulator. And that's what they did. So they brought a suit against the CFTC, basically arguing that they should be allowed to offer markets on, at that time, political elections. Which was, I think it was a close issue at the time. I think when you look at it now, it seems clear that this is something that would be like a paradigmatic derivative that someone would be interested in is trading on the outcomes of elections because it's something that has enormous economic consequences. But at the time, I think a lot of people thought that was kind of out there, but they won in 2024, just like perfect timing, like right on the eve of the election. They got a ruling in the DC District Court. Judge Giacob basically said, yes, these are legal.
Mm.
And so that really opened the floodgates for call sheet specifically, and then others followed. And the CFTC at the time appealed, took it to the DC Circuit, and then the DC Circuit declined to overrule on the preliminary stage, declined to overrule the District of DC decision, which meant through the election in 2024, they were allowed to offer these election markets. So this is kind of like the seminal event in the contemporary prediction market world, right? Is it went from only being available on kind of markets that were low salience and didn't have that much consumer interest to all of a sudden having election markets. And that's where it really opens up the first place. Okay. And so then that gets you to the election, which is November 2024. Trump obviously wins. And I think a lot of stuff happens around that. Like pretty soon after that, Shane Copland got his apartment raided by DOJ, but they were working with the CFTC. There's a lot of stuff going on, and I think a lot of people felt because prediction markets had forecast, I guess you'd say it's not really forecast, but because their probability of Trump winning had been higher than poll numbers, I think there was a sense among people in the political sphere that there was like an alignment between the Trump administration and these prediction markets, which I think was really an overstatement, honestly. Like, I think if you are a prediction market, you're saying, well, this is just what people are betting on. Like, we don't have any stance in this. But I also think opportunistically, it made a lot of sense for these markets to kind of piggyback on that. And so after the election and around the time that Trump came into office, crypto.com took the view that sports markets could also be legal under this kind of quasi rule that Judge Cobb had laid out. And so crypto.com was the first to market with these sports markets. Everyone else followed. And kind of since then has been the contemporary era of prediction markets, which is they cover elections, they cover sports, they cover entertainment. And that has been the source of a lot of the controversy that happens now in state governments. And that's kind of also the source of the opportunity that I think we'll see for this as a new paradigm.
I see. Okay. And that's very helpful learning what's happened since 2024, how we got to where we are today, and some of those major decisions that were made along the way as well. It seems like since the beginning of prediction markets, the CFTC has had kind of an aggressive stance against prediction markets. Is what do you think was the reason behind that? And do you think that stance is still there? Or do you think after the ruling that Kalshi was able to achieve, that prediction markets have a lot more flexibility in the types of markets they can offer and like the way the regulators approach these markets as well?
I do think so. Historically, it's certainly the case that the CFTC has been skeptical of prediction markets as a medium. I think that goes back to the history of the CFTC, which is, I mean, it's really intended to regulate institutional hedging products. Like historically, the CFTC has covered futures, which are used by industry or farmers to hedge risk that
Mhm.
exists just in any of these like physical world applications. Um, so like an example that I think of is in the 80s, McDonald's was thinking about launching the chicken McNugget,
Mhm.
but they felt like the chicken market was volatile and they wanted to have stable pricing.
Yeah.
And so because there was volatility in the chicken market and the pricing was stable pricing was an important commercial factor, like they weren't able to do it until they went to Ray Dalio and he created this future strategy using like soybean futures because he correlated the price of chicken to the underlying price of soybeans. Whatever. Like this is the kind of thing that historically this market has been used for,
Yeah.
which is really valuable. It has a lot of commercial value. And so I think when people look at prediction markets, when the CFTC looks at prediction markets, historically it's more of a consumer facing product. And not necessarily, not that it could only be, but I think that's what they see is more of a retail product, and they're a little bit uncomfortable regulating that because it's
Mhm.
outside of their historical remit. It's not something that they're historically prepared or acquainted with regulating. I think that's sort of the like background. Like I've never heard a bad word about the Russ Benham CFTC. Like I think people thought they were very professional and effective regulators, but they just were in this way a little bit conservative in a way that was a brake on the development of these markets.
Mhm.
I don't think that's true anymore though. Like I think the CFTC now, Mike Selig has really been a friend to the industry, not I, in the sense that I think they are open to this industry continuing to develop
Mhm.
and have promulgated guidance that tends to be supportive of the continued development of this industry, and in particular have taken a litigation stance that is kind of adversarial to the states, I would say, which is helpful for the industry for reasons that maybe we'll get into later.
Okay. That makes a lot of sense. And it's very fascinating to see how the history of the CFTC probably relates to their response to some of these markets because it's absolutely true that most of the organizations that would be trading commodities or futures were probably some larger organizations trying to hedge risk. And now you see retail traders trading
Right.
oil and gold and silver, and they have much bigger problems to think about. So that's super interesting. One thing that has been a really big topic, I would say, in prediction markets today in 2026 has been around fairness.
Mm.
So there's been a lot of talk around market manipulation, around insider information being used to influence these markets. And in one of your recent pieces, you claim that fairness actually isn't a long term threat to the industry. Like some of these issues with insider trading and market manipulation, they don't pose a long term threat to the future success of prediction markets. And I wonder why you think that's the case.
Okay, yeah, but my take is fairness doesn't matter.
Okay.
I just think this is like a fake issue that's highly salient. That the reason that people care about this is because you can go on CNBC and yell about it, and a bunch of low information consumers will respond to you.
Yeah.
And that's my take. I have people texting me all the time. They're like, "Oh, it's just like insiders trading in this market." And, like, clearly that is just a brain worm that sticks with people,
Yeah.
but what percentage of this market, like, this affects, I do not think I just don't think it's a significant issue in practice, right? There's a very legitimate question as to whether insider information has a place in prediction markets or not, right?
Yeah.
And there's arguments on both sides. Like the argument for insider information, for letting the Trump administration's executives trade on prediction markets, is that it then creates a signal that you have information earlier. Like the price on the market reflects information that is aggregated from these sources with higher conviction, so there's more money. And it it creates information that you can use. Like this is, I think, a legitimate argument for insider trading, right?
Yeah.
And the argument against that is if you're the markets, people are less likely, like other people are less likely to trade on it if they think that someone from the Trump administration is going to come in and bet like half the market and take it all away, right? And that's fair. Like I think this is a legitimate policy concern. I think it's something the market should think about is how much is the right amount? What is our purpose here? Like, are we trying to generate information or are we trying to create markets that have as much throughput as possible? And I bet like in the long term, these markets, and it's something that Kalshi has already done and they're for marketing reasons or for whatever, but like I bet in the long term, these markets will take a more active stance
Mhm.
in trying to prohibit insiders from participating because, in theory, that will make the markets more appealing to other people and create higher volumes. But, like, is this like a critical issue? I just don't know. I just don't buy it. I think people focus on it solely because it has this like rhetorical power. and because it's persuasive to normies. But I don't know, that's the most I can say for it.
Yeah. It's fascinating because you brought up Robin Hanson earlier,
Mhm.
and Robin Hanson also agrees that insider trading in prediction markets is not necessarily a bad thing. In fact, it just allows these prediction markets to operate more as truth machines, right? It brings you closer to the true outcome.
Mm.
And so I wonder if you have an opinion on whether insider trading is net good, net bad, net neutral, whether it should even be a part of these markets to make them closer to truth machines, or whether you think these markets aren't actually truth machines and they're just betting systems, they're gambling systems.
I don't know, it's so hard to say, like, how does it net out, right? Because think about the countervailing forces, right? You have on one hand insiders come in, bring higher signal, bring higher conviction on that signal, and then increase the output, the truth output of the market in theory.
Mhm.
And on the other side, you have maybe less volume as a whole, which creates less liquid markets, creates less signal. How do those two things balance against each other? I don't know. And crucially, the reason that I like what I think the right answer to this is if it's really hard to figure out how these two things balance, you should just let the market decide.
Yeah.
Like it's not a good situs for regulation
Yeah.
because it's really hard for an individual or for a group of individuals to come together and make a reasoned conclusion as to what the correct output of these two factors is. And I think when I see that, I think just we'll figure out just let the market decide,
Yeah.
and whatever the equilibrium that it finds is probably efficient in some way.
That's interesting because the market, I feel like the market can semi decide, right?
Mm.
Where if insider trading is happening in these markets and it makes retail investors who do not have insider information less likely to put up funds or they'll put less capital into these markets, then the prediction market, the folks who are creating the markets would have to react in some way. Like the market can't decide on its own. It has to be a little bit of a give and take where you see people aren't putting as much capital in. Maybe that's because of concerns around insider trading, put in platform guardrails to minimize insider trading. Now capital flows in. So it's not fully natural because part of it is actually the market structure itself.
There's like an externality here, right?
Mhm.
Which is that the thing that you're selecting for, if you are a firm that offers prediction markets, or if you if you're Polymorph culture or whomever, right, is you're selecting for max volume,
Mhm.
right? And that is what in theory should create max revenue. Like I don't maybe there's a differential between different pieces of volume on revenue, but in general, like you're selecting for max volume. And max volume is not necessarily the same thing as max truth.
Okay.
And so if you say that the good of a prediction market is max truth, but all of the operators are selecting for max volume, then you could see where those things would diverge, right?
Mhm.
But I just think it's really difficult to like create a policy to get them to converge, right?
Yeah.
Maybe you do get a little bit of signal loss somewhere along the way, but if if it's hard to come up with a clear policy that remedies that,
Yeah.
I think the default should be nothing.
Okay. I see. I mean, who knows? Maybe we'll have a world where we'll have prediction markets with zero insider trading max volume and another prediction market with all insider trading minimal
Yeah.
volume. And
Eh,
that'll be a full truth market, you know?
yeah, I mean, I don't know how I don't know how it would work, but yeah, I
Who's the
think like
counterparty? We'll never know.
right, yeah. I mean, it is like you can see why it's a thorny problem
Yeah.
because it's in securities insider trading, there's like MMPI is something that is sort of traceable
Mhm.
because it exists in these known forms,
Mhm.
right? And so you can kind of see where it starts to exist, and then you can see a trail where it enters securities markets, and then the SEC can use that to reverse engineer like who could have had access to the MMPI who was trading on it illegally. When it's things that happen in the world, like maybe there's more options of how that information could come about. Like maybe the paths to identifying where it was disseminated are a little bit more difficult. And so maybe it's just like maybe there's another problem with policing insider trading and prediction markets in that it doesn't provide as clear a locus of enforcement as you have in securities markets.
Yeah.
And I think you know, people who work in securities markets definitely feel like insider trading regulation in securities markets makes securities markets better.
Yeah.
Like, I think there's good reason that you might, as an industry participant, prefer regulation on insider trading. But I just think, like, from a theoretical perspective, when you step back in prediction markets, it's not as clear cut that there's, a single normative path forward.
Yeah. And that makes a lot of sense. I think commodities face the same issue where someone may have more information about onion futures, which they can't even trade on. But let's say they have more information about onion futures because they're near an onion farm, but they still don't know what the case is for all onion farms all across the world or
Right.
in every single onion growing region. They also can't control the weather. And so there's so many factors that go into the future of commodities that it's like someone might have partial insider information, but you can't really claim it's full insider.
But this is the critical thing too, is the whole point of trading in markets is that some people have more information than other people.
Yeah.
And the difference between insider trading and legitimate trading is not that some people don't have more information than other people, it's the source of that information.
Mm,
And like the whole way these work is that people get more information and know things better than you.
yeah.
And you stake your money on your position and you're wrong and someone else is better than you at it. And that's how
Yeah.
they get money out of it. And like whenever you put your money into a prediction market, you're making the assertion that you're making is that I think I have better information than you. I think that my ability to predict this is better than your ability. And I don't know, like I just don't think like being wrong is like what's the information that is permitted to inform that statement is
Yeah.
the question. And I don't know, it could go a lot of
Yeah.
ways.
I mean, maybe the core issue is that everyone trading on prediction markets wants a participation trophy for trading, and they don't realize that some people are going to win and some people are going to lose.
That's the way. It's the way of the market.
Okay. Well, going back to fairness, I know you said that fairness is a non-issue. It's not something that affects the future success of prediction markets, but it's being used by a lot of folks as rhetoric
Mm.
for making people upset, saying that prediction markets are bad because they're not fair. And so, could that rhetoric actually blow back on prediction markets and make it so that it's harder for them to achieve success? Maybe it would decrease their usage, it would put a bad name on prediction markets. Like, could that actually hinder the success of these?
100%. Like I think clearly there I think there is a set of persons who view prediction markets as an easy wedge issue,
Mhm.
as something where you can take this issue, like fairness, because it is so salient, and use that to just drive your own views, drive your own success politically, drive whatever. Like attention is a currency, and you can use this perceived failing of these new markets as a currency. And the prediction markets will suffer for that because there are people who otherwise would have been neutral or indifferent to these markets who all of a sudden have a view on what call she should do.
Yeah.
Like, I just know so many people who know nothing about financial markets, have never thought about derivatives in their lives, who are like, yeah, prediction markets are bad because X. And I think that's crazy.
Yeah.
Clearly, it's detrimental to these markets, and you see people respond to that. You see college responding to that with new advertising that I I think they get made fun of on Twitter a little bit
Yeah.
for, but, like, they're not communicating to, like, the Twitter cognoscenti who know what a derivative is. They're communicating to Matt Carmel, my friend, who has no idea but has a view on it.
Uh huh.
And so anyway, well, the upside is like, yes, I think that's right. Like it is potentially harmful.
Hmm.
But when you think about the issue, is the issue actually fairness or is the issue that people are exploiting a vulnerability of these markets against them? And who is responsible? Is the responsibility to correct fairness or is the responsibility to counter those that are using this rhetoric for their own gain? And I think when I look at it, it seems like the latter more than the former.
Yeah. That makes a lot of sense, and I think it tracks very closely to the rise of sports betting almost a decade ago,
Mm.
because back when sports betting was becoming very popular with the DraftKings of the world, there was a lot of anti-sports betting rhetoric saying that it was gambling, saying that it was bad for kids, all of these
Sure.
things. And sports betting is still incredibly successful, even though they did have a lot of this anti-sports betting rhetoric against them. And so I think it just depends on how this fight is going to shake out between the two parties and the two sides. But it's very possible that prediction markets could still be successful with this anti prediction markets rhetoric right around.
Yeah. I mean, prediction markets are gonna if they can do
Yeah.
sports contracts, which,
Yeah.
maybe we'll get into later as to whether that'll be the case or not, but if they can, they're gonna be successful because this is a product people like, right?
Yeah.
This is something that people wanna do. People wanna watch things that they're already interested in and then wager money on them.
Yeah.
And the reason they wanna do that is because it creates, like, signal in your brain. It just makes it more activating.
Yeah.
It's very clear, like, I don't think there's any question historically that this product is gonna be popular everywhere, which is
Yeah.
why even when it was illegal, it was still rising up in black and gray markets, right? Like,
Yeah.
if a product can just form itself, even in an unfavorable regulatory environment, it's gonna be successful regardless of how many people are, like, disapproving of it.
Yeah. That makes a lot of sense. So in that case, let's talk a little bit about gambling. So you argue that prediction markets as a type of market and a structure are a lot better than some of the traditional
Mhm.
gambling systems that exist today.
Yeah.
And so in that case, with that comparison, are prediction markets similar or equivalent to gambling, and are they regulated the same as gambling? And if so, why? If not, is that even a fair comparison that they're better than gambling?
You think I've written a lot about this over the years about this idea of gambling versus a financial product.
Mhm.
And I think like people try to approach this from first principles and say, but without like their priors are all formed in like whatever preconception of contemporary society. I find it very strange. Like people come in and they're like, well, gambling is X and this looks a lot like that.
Mm.
So this is gambling. But I do think like eh, in any state definition of gambling, CFTC regulated prediction markets meet that definition. So, like, if you look at it, and if you look at things that Nevada has said, or Maryland, or whatever, I mean, it's every state now, right? That definition will be like placing money for a wager with a chance of getting a return, right?
Yeah.
A- and they'll meet that definition in general, right? But the reason they're not gambling in this narrow legal sense is because it's it's a CFTC regulated product
Mhm.
that exists under the Commodities Exchange Act, which makes it a derivative. And it is like a little bit glib to put it this way, but that is literally like that's the difference. If you want to pare back all of the regulation
Mhm.
and take out all the distinction, then you're in a world that like none of us have ever existed in,
Mhm.
where you're trying to create all of these products from first principles. And I think if you were in that world, you would almost certainly prefer the federally regulated product to the state regulated product. So the federally regulated product you call derivatives, state regulated product you call gambling, because it is just in every way better for consumers as a federally regulated product. And I think this comes down to the historical bases of these products. Like if you look at the federally regulated product, it is meant to be a commercial product, an investment product. And so it is structured around fairness
Mhm.
to the user. Uh, and that's better for the user. If you look at the state product, it's meant to be an entertainment product and it is structured from from a position of capture from the industries that provide it
Mhm.
for profit for those industries. And so state regulated gambling products, which derive out of like historical regulation in Nevada, uh, basically allow the House to take every advantage that it can. And the most notable, like the most salient of these differences, is that the House in the state regulated product can downregulate the amount of bet that you are allowed to make based on based on your success in betting, based on their underwriting of your likelihood of success in betting. People talk about this a lot, but I think it's a serious, like, it's a real thing. Like, if you are a good bettor, they will not let you bet on state regulated gambling sites.
Yeah.
If you are a bad bettor, they will take you to Knicks games and like buy you drinks and rub your back and do all this stuff. Like, that is fundamentally exploitative.
Yeah.
And that's fine, like, as an entertainment product. But if I was going to choose which of these markets I wanted to enter, I would want to do the one where the counterparty is not the offerer, and where they're not going to downregulate my bets if I'm successful. Now, this is, there is like, for a retail product, there is a little bit of a confounding issue in this, which is that the vast likelihood is that if you're a retail trader, actually you are not a winning bettor, or you're not going to successfully win. And so actually the odds might be a little bit better for you in a state regulated gambling product, because you're not competing with the highly successful
And at least you get
gamblers.
Knicks tickets too.
Yeah, and you get Knicks tickets. So I don't know, like, I think you could argue for either in practice as an individual, but if I was going to think about how I wanted the market to be structured, I would want it to be structured like a prediction market.
Okay, that's fascinating. So, if I understand that correctly, prediction markets do meet the definition of what could be considered a gambling product.
Only a judge can say that for sure.
Okay, maybe if a judge somewhere says that, then that
Mhm.
could be true.
Could be true.
But because they're regulated at the federal level, they're not considered a gambling product.
Mhm.
But that's actually probably better for retail consumers because it's more focused on fairness at the federal level.
Yes, that's my view. I mean, it's not just, it is just, the product is structured to be like a neutral product that you can use for legitimate financial purposes.
Mhm.
It's not structured to be a casino that siphons money out of you.
Yeah.
Uh,
It
eh,
sometimes feels that way though, with 15-minute markets and things that are meant to be fast turnaround. It feels a little addictive.
this is like, and I think this is a legitimate point of policy interest,
Mhm.
is these markets do exist for legitimate purposes. And I think even sports, if there's a legitimate purpose, but there could be guardrails around how like subsets of this market are structured.
Mhm.
Generally, I think I feel fairly libertarian about this, where I think state gambling should be legal too, right? Like, I think either of these markets should be legal, but I do think you can see why someone might be interested in regulating certain permutations of these products in a way that maybe they weren't structured to be as limbically activating as they could be.
Okay, that makes sense. And on that note of regulation, are there any upcoming pieces of regulation, decisions that are going to be made around prediction markets that could influence the direction of these markets?
Yeah, I mean, I've read about this a couple times, and there's a ton of stuff. Like, there's
Mhm.
so much stuff going. Like, every state has litigation that's ongoing, and they're getting kicked up to. I think the Ninth Circuit has one right now. Maybe the Third Circuit is going to get one too. I think Maryland is in the Third Circuit. Anyway, there's circuit courts deciding this stuff. My view, what I've said, is that ultimately only the Supreme Court is going to decide what happens with these markets, and that's it. It is like core Supreme Court type question. It's like fundamental federalism question: is, do the states have the power to regulate these federal markets when they exist in the state, or are they preempted by the Commodities Exchange Act?
Mm.
And I think my view is they're pretty clearly preempted by the Commodities Exchange Act. I think the language in the Commodities Exchange Act says they are.
Yeah.
But there have been some state courts and some federal courts, like the federal court in Nevada, kind of famously now, initially said that they were preempted and then changed their mind. It's the same guy. It was kind of crazy. Uh, but this, because it's an issue of federalism, I think it's going to kind of burble up in different places and then eventually get to the Supreme Court and be decided. And so like a sub facet of that, which I think has already kind of been before CLEC came in to the CFTC, there was a question of whether the CFTC was going to be supportive or not of these markets. And I think had the CFTC come in and said, no, we think sports markets are illegal, the posture would have been a lot weaker for participants like Kalshi to fight this litigation. Not that it would have been possible, but it would have just been a lot weaker. But I think because the CFTC has come in and been kind of supportive and for very good reason, like even if they don't like these markets, I think what they're fighting for is really their like jurisdictional remit. It's like their control of something that is a federal product. I think even if they didn't want the markets to exist, if I was the CFTC, I would still fight these legal battles they're fighting. But that was an open question. I think it's now been decided, or now it appears decided that they're kind of like on the side of prediction markets in this narrow fight. And we're just waiting for the Supreme Court to figure it out.
Okay. Do you have any prediction on when that would be?
I don't know. It's so hard. I guess I'm not a Supreme Court expert, so consult advisory
Everyone talk
opinions.
to your lawyers. of
Yeah.
course.
But if some of these circuit court decisions are decided this year, which is plausible to me, then maybe we could get a circuit split in December, and then someone applies for cert, and maybe like June of 27, you could get a decision. But this is just guessing.
Okay.
Yeah.
Fair enough. And that's not too bad. I mean, that's not too far away.
Well, it could be 5 years after that. So
Also true. Also true. We'll take the optimistic guess.
Mhm.
Okay, well, that was super insightful. If anyone wants to take a look at other pieces that you've published or other writing that you've done, where could they find something like that?
So we have a Substack. It's the Brogan Law newsletter. You can find it on Google, or you can find it through our website, broganlaw.xyz. If you want to hire us for legal assistance, we represent a wide variety of startups in cryptocurrency, prediction markets, emerging industries. If you're selling your company, we can help you do that. We're a lot cheaper than Big Law. It's really good. We're, I think, the premier elite boutique in this space in New York and really across the entire United States. So you can find us in any of those places. You can email me at aaron@broganlaw.xyz. You can text me at 207-749-6534.
That is crazy.
Hit me up. Always available.
We'll put the number right on
Yeah,
top.
put it right up here. We're available. Come on in.
Got hurt in New Jersey? Phone number. All right. Well, thank you.
Thank you for having me.
Of course.